Hello, everyone, and welcome to the proptrade.com. It is Wednesday, no, it's not, it's Tuesday, you fool. It's Tuesday, the 9th of the 9th. It's the 9th of September 2025. We were going to do a live trading session for the US Open. We were going to start about half an hour ago, but we've had some technical issues. Our trade lock have had some technical issues today. First time really it's happened in the live session. There's certainly a live London session I can remember impacting my platform, but it's down at the moment. I think it's coming back, or it's come back, and we'll have a look at that later on in this session. But instead, I'm going to run through a webinar called Trading the Opening Bell, which I did a few months ago and I've repeated a couple of times. It's on our website if you want to watch it. Obviously, if you're here live now, we can go through it again. The actual action of actually what to do, how to set yourself up for the opening bell, whether it's, whether you're in Asia, whether you're in Latin America, North America, Europe, wherever you are in the world, there's an opening bell. There's a session that fits your time frame, that fits your lifestyle, that fits your trading day. Obviously, here in Europe, we can cover quite comfortably in our trading day the main big session, which is basically London and the New York overlap, the overlap of America opening the North American market. That's the Canadian market as well. Obviously, Latin America comes to life as well as New York kicks off. So lots of opportunities here. Obviously, if you're over in down in Southeast Australia, you wake up and you got New Zealand open, and that's about it in Sydney. So a lot less liquidity, a lot less. Not necessarily opportunities, but a lot less news going on, a lot less volume in the market. So, it's all about preparing yourself wherever you are. And you want to trade the opening bell of all the different sessions. Again, preparation is key. So that's what we're going to talk about today. Let me just make myself a little bit smaller. Muskin, good afternoon, good morning, good evening. I don't know where you are in the world, but hello, my friends. Anything we can help you with, let me know. So we've had trade locker had some technical issues, wasn't it? Issues on our part, but obviously that's the platform we're providing. So, it's 2:30. That's the first cup of tea I've had today. I've had three cups of coffee, but that's the first cup of tea, and it's very, very nice. Anyway, let's not waste any more time. So let's crack on. There's quite a lot of slides here, and I think there's quite a bit of repetition, knowing me. But anyway, repetition is the good way of learning sometimes. Those of you who don't know me, my name's Stuart. I'm the head of education here at theproptrade.com. My background, I went to university in London from a very small village up in northeast of England, on the coast. I spent many, many years in the city of London. I think it's more than 20 years. But anyway, then I worked for myself for a little while before my family and I relocated to Cyprus at the beginning of the 2002. I spent 12 very, very happy years working for brokers in Cyprus, mainly HFM, Hot Forex. And my approach to trading has always been the same, really. Before I left London, or before I went to Cyprus, or before I worked actually physically in the business of analysis, I did work for two big banks in the city of London. But it wasn't directly involved in trading as such. But it was in the technology side of things. But it was very much exposure to the trading room and how things were done and what was done and what should have been done differently. But anyway, story for another day. But my approach to trading, which really started in the early 90s, is probability, simplicity, and timeframes. I'm an end of day trader. That's where most of my trading is done. I like the some short-term trading opportunities as well. I'm happy to take those. But really, the bulk of my investments my trading portfolio, let's say that, is on an end-of-day basis. So it's a real set-and-forget type approach, and trades and trends can run and run. I'm a trend-following guy. I always have. It works for me. It works well enough for me. I'm not the greatest trader in the world. I'm by far the worst, not the worst either. I understand myself, and that's the key thing. As I've written here, always do what is probable, keep it simple. It's all in the numbers. So you have to understand things like leverage and margin and the spread, what a spread is. There's so many people come into this business not understanding the basics and expecting to make money, and how the actual business works, how brokers work, how brokers make their money, how we as independent traders make our money, how IBs, affiliates, all that sort of part of the market Everybody can make a very good living out of this. Principally, first and foremost, it's understanding yourself, and that's managing your risk and being a risk manager, whatever part of the business you're in. So we're going to look at today 4 key things. What are the opening trades so important? Why are they so important? And some times and days are more important than others. We'll have a look at that as well. The key sessions, even, people talk about the over-the-counter FX market. Crypto, obviously, you can now trade 24/7, 7 days a week, 365 of the Gregorian calendar years. So it never stops, but sometimes, and as we say, and days are more important than others. So key sessions, when are they? And how even that market, the over-the-counter 24-hour market, is still impacted by the opening bell, the opening of the actual centralized exchanges, whether they're trading options, forex, options, futures, stocks, whatever it is, commodities. And how we trade these key sessions and how we can benefit from those opening bells and the closing bells as well, for that matter. Same principles, little different tweaks for the closing bell, but very much same probability. So, what is the trading the open all about? So lots of things we want to have a look at. Key things, 5, 6 key things. Is the is the market in balance? Have we balance or imbalance? Are the sellers ahead? Are the traders? Are the buyers winning out? So where's the momentum going? What's the risk management like? It's absolutely key. We get high volumes, can mean high volatility around the opening bell. Therefore, you need some good risk management. Know when to either follow the trend, follow the wave, or get out, get quickly. Many people love it. Many people just trade these opening sessions more and more so these days as time has gone on. We see more and more people just trading in short bursts, 20 minutes, 30 minutes, an hour, around the opening, round the close, or pre the open, pre the close, like we've been doing recently here at the proptrade.com. But yeah, a lot of people hate it. Some love it. I quite like it. And I jump out of bed some mornings, 6 o'clock, to see what's going on, particularly with the DAX. And I really like the DAX here in Europe, and it trends really nice. It fits my personality more so than the FTSE. And can have some successful sessions with the DAX, as we've been showing with our European opening trading sessions. So when is the open? As I said, it's different in different parts of the world. What time frame? How long does it last for? What's regarded? Does it still? Can we correlate this opening session? Is it 2 hours? Is it 20 minutes? Is it 5 minutes? Gaps are key, both the beginning of the session, the end of the session, and obviously things about order flow. How the big boys are playing it, where the volumes are, where the momentum is. So opening of the trading day is so important. Early trades can show what may occur in the rest of the session. So if we were long yesterday, or the market closed up yesterday, the probability it may give some back in the opening session, it may continue on. That can be key for the rest of the following day. Again, we're talking about the trading day. It could be that you want to trade, once a week or something. You've got a big session. Jatin, hi. Hope apparently the platform's back, I've been told. So I don't know whether you're trading or you're following me and listening to me, but we'll bring the platform up as well. Mine's down at the moment, but I haven't restarted it for a while. So thanks for being here, my friend. Anything you want to add, please stick it in the questions here, or anything you want to agree or disagree with, let me know. When I say the opening, I'm talking about principally the day, and but I'm saying many people, traders I know, for instance, also trade off the weekly charts, the weekly key turning points. So they'll use the week rather than what's going on an individual day. Other traders, trade their session as like an hour, or their session might be 30-minute blocks during the day, different 30-minute blocks at different times of the day, around perhaps major news, or around the opening bells of Europe and Asia and North America, big news. Trump, for instance, Trump press conferences, that sort of thing. I know people that trade around these times in blocks of time. So you need to, what is the session that works for you? So what's going to happen at the beginning of the session is that all the information from the previous session, the previous close. So let's go back to the day. So if we closed Monday night X, nothing's happened particularly. What happens overnight before we start the Tuesday session? Well, nothing's really happened today, for instance, particularly. There's been a big potential merger in the mining section here in the UK. Big UK miner and a Canadian miner, particularly around copper. This is obviously part of the AI story because copper is, still the main thing, and cable's still the main thing that all these data centers need. So it's very much on the back of the booming AI sector. Obviously, the ripples out into the power sector, and therefore, the commodities like copper, which is absolutely fundamental to electricity provision. So, there's the sort of news. So, what's happened since the market last closed? Economic data, political news. You've got all these shenanigans all around the world, from Indonesia to France to the UK. The very divided countries politically now, particularly in some of these developed markets. Hasn't been an earnings announcement. Companies are continually earning. We're outside of the main earnings window now, but there's obviously announcements here and there. Today, Apple have their what used to be a major impact. Now, the last few years, the beginning of September. Beginning of September has always been the Apple Day, when they announced their new products for the fourth quarter of the year for Christmas sales. Now all of that gets leaked out, and there's not going to be any particular surprises tonight. I mean, there may be, who knows? But yeah, it's Apple Day today, so it's not an earnings announcement. It's big news: the iPhone 17 and upgrades to other various products in the Apple portfolio. And then, has there been any announcements by the banks about particular institutions or particular trading platforms that particular companies? So we don't offer individual share trades here at theproptrade.com, but it has an impact on the wider indices. So me, for instance, as a DAX trader, every morning, there's only 40 companies in the DAX. It wasn't only 30 at one point. There's only 40 in the DAX. So any major news about one of those companies, especially a big one with a big weighting within the DAX, can have a major impact on how the DAX might perform during the session. So watch the news. Next one is really volume. I'm going to talk about a lot about this afternoon. Volume is key. Is it higher? Is it lower? Is it the same? Is it really? We'll come back to that point in a minute. What's been going on before the cash session open? What's the pre-market activity? What's going on? Are we high? Are we low? Where are the highs? Where are the lows? Are we above or below the close of yesterday? Are we below or below? Above the low, the high, the medium, where we are, the pivot point of yesterday, all that sort of stuff. And can this move, if it is momentum, can it be sustainable? If not, if we're continuing to go sideways, if that's been a session, been going on for days, this thing can't break out, is today the day that this sideways market breaks out, whatever market it is. So it's all about preparation. As with anything in life, prepare. Volume, you compare opening volumes to other opening volumes, other days, what's happening. Are institutions getting involved? That's the key thing. There's lots of institutions who have lots of orders. I know certainly the two big banks I work for used to drip feed orders into the market during the day, but they used the noise and the volatility of the opening and the close, and the London fix sometimes in forex markets for hide some of their major moves and some of the major purchases and selling. So volume high is usually a positive thing. Volatility is the highest at this time of the day as well. The rest of the day can calm down quite quickly. We see that. But I mean, again, the DAX is a great example of that, where things calm down after the opening session, the opening bell, the opening hour or two, and things just go quiet during the mid-morning, unless there's some major news coming out. Okay, so what is the opening? Well, for me, it's really the first 60 minutes from the actual cash open. But where you are in the world varies. Obviously it depends on where you are from as far as the 24-hour GMT clock. So, the week opens, the Monday morning really opens in Auckland in New Zealand. Very small market, New Zealand. Obviously, even before Sydney wakes up in an hour or so later. But that's, GMT plus 12 typically. The Asian session, really kicks off with Tokyo. Tokyo remains, a lot of people criticize me for this. Tokyo remains, in my humble opinion, still the key Asian city when it comes to the financial markets. Obviously, China has grown very, very quickly. Shanghai is a major player. Hong Kong remains a major outlet for the Chinese markets as well. But Tokyo remains a very structured market and still remains the key trading city for the Asian markets. And I watch Tokyo and take the impact of Tokyo more than Shanghai or Hong Kong or other areas in Asia. So that's GMT 8. So it's still it's 4 hours after the market is kicked off on a Monday morning in New Zealand. So know your session, trade the session, highest volumes, liquidity, tightest spreads, equivalent, most participants. I'm sure we all know that. And obviously that is when London kicks off. And that is the overlap between London and New York is when the deepest liquidity occurs. So particularly in the Forex market, Forex is still very much a London centered, even with all its problems with the London Stock Exchange and losing of major companies and back to places like more, in fact, to New York as well as into Asia and Hong Kong. But that London New York overlap remains the key depth of liquidity. You can see here as far as Forex is concerned. There's some of the major news announcements obviously coming out in this session as well. But you can trade this all the time, and obviously you can see here there's 1, 2, 3, 4 key opening times in the 24-hour clock for this opening bell preparation. Okay, the market itself starting in Sydney, Hong Kong, Tokyo, London, Frankfurt, and New York, and Canada and Latin America coming on later in the day. So know your session, trade your session. I've got lots of these type of charts on this presentation, but this is the sort of thing you want to be doing. I think this is the Dow. I think it's just a minute chart. I can't remember what this is, but so this is Friday. This is obviously Monday open. So we got all the detail. The Monday opening, big excitement because we got all the the gossip of the closed weekend session. So Friday's high, Friday's low, wherever it is on here. I don't know. It's obviously marked on here. I can't remember what this chart's from. It's from yonks ago, September. I don't know when, but anyway. And obviously, this is a strategy that's set up. It happens to be the crossing moving average strategy here. You see the big candle here. See the volumes, massive volumes. Here, the green line's volume. This is the MACD, and this is the RSI down here, the blue line. But huge volumes here. So flat volumes here over the Asian session during the Monday session. Then volumes pick up massively as the market kicks in. Technically, huge candle, even on the minute candle, that was enough to take a long position and just ride that trend all the way through the opening hour, through a key level, and out when it, the rules of trading this strategy are broken, which is basically a close below the yellow line here. You can see on the midline of these three moving averages, the purple, the magenta, the yellow, and the blue. The price action on the candles hasn't broken under the yellow line till all the way up here at number 2, this red candle here. So it's a strong positive direction. And for many, as I say, many like to trade this opening session. That's worked out because of the strength of the size of this big candle here. And they're enough for the day or even enough for the week for some people. When you have a big, strong, continuing trade like this. This quite often doesn't happen. We get an opening. I mean, although we got in here at this blue line, this could have easily, you can see it was sort of rambling around lows. Came off Friday lows, came back to test it here but it was higher, so it looked positive, and then went above the high of Friday and kept going. It could have easily come back and then back into this session and below Friday. So it was all dependent on what was happening. So make sure you know what your approach is to the open. Okay, so although the opening hours is the open, many use different times. So as I say, some just are in and out for 20 minutes, 15 minutes. Some extend it to an hour and a half. For me, that seems a bit. That's the impact of the opens by the volatility, the noise. Knowing what I know about how the institutions trade, a lot of that open will have already gone and have to report within 30 minutes or an hour. 90 minutes seems a bit too long. And I say a lot of people would have done that, either won or lost, and gone off for the rest of the day. Then, as I say, some people would then come back and wait for the New York Open and do the same thing again. Or if you're in Asia, you're comfortable to get both the Tokyo Open, Sydney Open, New York, Hong Kong Open. A little bit of activity as Middle East comes in and India markets as well. And the key one would be the London Open. But it's getting a bit late if you're in, far east of Asia to sort of trade into the London close. But you certainly get the European Frankfurt London Open as well. If you're in LATAM, North America, obviously the New York day is the main business day for you. And, if you get up early, you can catch some of the late European trades, catch the New York Open, catch the London close, the Frankfurt close, and obviously into the New York close as well. So it depends where you are in the world, what fits you and how you function and what works for you. Obviously, if you're in Africa, we come straight down the prime meridian. So, the European day fits quite nicely to most African countries. Not too much out of your comfort zone when it comes to catching the open and the close of both London, New York, and Frankfurt as well. So that sees where you are. I just put this little checker box together about what can typically or not typically happen. It's not it's nothing to write down and say these are fixed, but I've identified these sort of phases of that first hour. So the first 5 minutes can be a bit crazy. It can be going up, choisy. Are we going in the right direction? Lots of conflicting news coming in. And certainly all over the place. But the first 5 minutes, what did that first 5 minute candle look like? Is it positive? Is it big in one direction? Are there big wicks on it? Is there a rejection of high, a rejection of lower prices? Whatever. The next sort of 5 or 6 candles. So for the first 30 minutes, another 20-minute session, is this a drive? I've written there, initial drive direction. Has it reversed? Has it hesitated in that first period? If not, it's still looking good. Are there some targets that we might be looking for? Is it a previous high? If it's not the previous day, is it the day before or the previous this day last week, the previous Monday? If it was Friday, was it Thursday's high or Thursday's low? What's happening in that first 30 minutes? After the first 30 minutes, do we see any reversals or any clear direction? There's a lot of mess going on sometimes if there's no clear direction. So you've either had a few losing trades or a few winning trades, but no clear direction. We may be settling into a congestion, and really things start to relatively calm down after that first 45 minutes. And then the last sort of 15 minutes of the first hour, the last 20 minutes or so, 15 minutes of the first hour, is there a clear trend? Is there not a clear trend? Have we had a significant mean reversion? What are we doing? What's happened? And it could be just a mix of everything and walk away. It's not worked, sort of thing. Or it has worked. There's a clear direction, clear trend. We benefit from the first 45 minutes. Is it going to go on? Or have we made enough? Are we not too greedy to walk away from that session? Or can we see some clear resistance and support areas where the market price has gone to and we've reversed? We've gone up, we've reversed, we've gone down, and we've bounced off. So what is going on? Basically, you get a feel for that in that first hour, so you can feel how it might break down or not break down. Yesterday was another example of that on the Dow. We'll come to the live charts hopefully if the platform's back, and it looks like it is by lots of things. So again, obviously, on top of all of that, obviously have your calendar available as well. In Europe, for instance, lots of news is released if the market is opening at 8 o'clock London time. There's lots of news released in Europe and in the UK at 7 o'clock. Lots of 7 o'clock time. So you can see here factory orders here on this particular day in Germany. So be aware of that. Okay, so the news could the movement of the candles pre-market obviously impacted by the news releases. But again, that goes without saying. Hopefully, I'm sure all of you do that. That are trading on an intraday statement. But also, then obviously, what the calendar gives you is the main impact news of the day. So for on this day, for instance, it's an FOMC day. I mean, there's not much bigger news announcements in the FOMC statement, unless it's things are very very much priced in, like what's probably going to happen next Wednesday. So the activity of the London Open is a long way from what the FOMC statement is going to say later on in the day for intraday traders. So we'll still have an opening flurry on the European Open and indeed the US Open ahead of the FOMC statement, but that would be still the main event of the day and what will restrict perhaps the volatility. Obviously, ongoing news is ongoing news, and sort of move things ahead of that. But then the statement, the big impact, high impact events still have their movement. So they tend not to be around. My point is, they tend not to be around the actual technical open of the live cash markets, but have them ready. Okay. So as with everything, as I said at the beginning, preparation is everything. What to trade. So what's gone on in the previous session, the previous session before that, whether it's a day, whether it's a week, whether it's the same day last week, what's happened, are there any trends, where the mean reverting areas, where's the support and resistance areas. All markets, as I say here, have opens, but the indexes of stock markets have 5 cash opens a week per, and then we got each session. So the Forex market only has a major open, Sunday night here in London, Monday morning. The DAX and I say the Dow are my 2 preferred index trades. Earnings season, that can be particularly volatile for individual stocks, but that also has an impact, obviously, on the stock market that it's involved in. We've seen that with the obsession with these mega tech companies having this huge impact on the wider S&P 500, the Nasdaq 100. So again, if a company's reporting either before the market has opened or after the market has closed, the impact on the opening session will be the following either the same day if they've reported before the market opens, or the following day if the report after the market's closed. And obviously, there's a few companies, or quite a lot of companies now, that you can trade and that are registered in different regions. You might have an American company, but it also can be traded as a cash option in the UK and vice versa. There's ATRs in the United States, which allow you to trade European and UK companies in America as well. And the other key thing is the gaps. Watch for gaps at the beginning of a session as well. How big is the gap compared to the previous day, previous high? How much of the wick was there? Again, I've got a specific training webinar on trading the gaps, but that's a technique as well that some people just focus on looking for gaps and don't only ever trade the gaps to benefit from that arbitrage of the gaps of the price action. Because again, all of this is related to what your chart looks like, and that was all. The price tells you everything, doesn't it? The price tells you anything. That's where the trades are being done. That's where the buyers and the sellers are agreeing a price. This is the price of the Dow, and somebody thinks it's going to go higher, so he buys it. Somebody else thinks it's going to go short, so she'll sell it. So we have an agreement at that price. He wants it to go up, she wants it to go down, and one of them will be a winner and one will be a loser. And that's trading for you, and that's what's going on all the time in all markets, and more so because of the open session, because of this other news that's coming from the stock markets themselves and the futures markets that are actually opening. Have a system, trade the system, prepare what has happened, and mark previous cash sessions opens and closes. So 8 o'clock, 4:30 here is the London stock market day. in New York it's 9 till here in here in London. New York opens at 2:30, closes at 9 o'clock my time. So they're imprinted on my uh, memory. So a simple 15-minute strategy, 1 minute chart. Let the 15 minutes pass and see what's happened. Mark the high, mark the low, the first 15 minutes, and then are we continuing to move higher? So trace it higher. Are we going short? Chase it shorter. If there's no clear direction, stay out. This is again, these are just different ideas. Anybody that's listened to me or watched me before, one of my favorite indicators is the 21 period exponential moving average. It's not too short, it's not too long. It's a bit like Goldilocks. Goldilocks's porridge is just in the middle a bit. Obviously, there's faster moving averages, there's slower moving averages, but the 21 EMA, if I had to put one on my chart, that would be it. Very simply, if we're above it, look to go long. If we're below it, look to go short. If the moving average has an angle on it, if it's flat or it's not steep enough or not either pointing up or pointing down, stay out. The art of trading, guys, and the art of success in trading is very much knowing when to stay out as well as when to get in, not jumping in too quickly. So this is just an example of what I've just been talking about. They're the volumes. This is, I think this is the Dow for a particular day. I don't know why I've got 20. Must be when I put all these slides together. So the green line will be the 21 exponential move. Now this is from, this looks like a, doesn't look like a trade locker chart. This looks like a MT4, MT5 chart. But anyway, it doesn't really matter, does it? It's just a presentation of the price action. So you can see here, it was relatively long. It crashed quite sharply, but it reversed within one candle. And then it triggered to move long, a bit of a glips down. And I think this must be the open it's marking on there. So open here, it was the moving average is flat. We've sort of biased to it. More above than below the 21 EMA. There's no clear direction anymore. There was here, and there was here, and there was a movement down here. At this point here, whether this is the open or not, there's not a clear direction. So at the moment, stay out, leave it, see what happens. Is it going to hold? Is it going to break above where we are at the moment? Where's the high of this one? Well, the high was there, the low was there. So we're above the 21 EMA. So we're biased to the upside. We're closer to the high than the low. So you want to be looking, if that continues, into the white space, because this is where we make our money, isn't it, guys? Technical analysis can help us with all of this, what's gone on in the past, and it plots the price action, and it can also sort of predict where things might happen, but we don't know. This is where we make our money. The right-hand side of the chart, left-hand side of the chart is what's already happened. So here, reading of my reading of this slide is basically biased to the upside, but at the moment we'd stay out for now. See if these two big candles hold the bounce back. Clearly, there was buyers down here, so if we're getting down here, we might be looking to buy again. But we need to break out of that zone there if we're going to start to move up and really above that green line. It's already on the chart there, and that might be. I think that's a round number, isn't it? I think it was 4,600. But I can't read that. It's obviously a cut and paste from another, perhaps presentation or a screenshot of a chart. Let's have a look some more. So what was that? Oh, hang on a minute. Was that the minute chart? Oh, is this the daily? All right. Okay. I see what I'm doing. I should have checked these charts. So this is the daily. So this is the high and the low of the previous sessions. What I've got on here. The pink line. No, it can't be. That's because that's all the way down there. Is that the daily chart? Hang on a minute. This just should come clearer. Not sure. Anyway, that's. So this is 15-minute open, significantly above or below days and highs on the previous close. So, all right. So that must have been the opening candle here. This is what. All right. Okay, I can just about see that. I think that says 14:30. So this is. Yeah, I can read that. So this is the US session. I don't know here, two blue lines. So this is I think that says 14:30 and that says 2100. So we opened very strongly. This is the 15-minute opening candle here at 2:30. So we've rallied high, but within. So there's 30 minutes, 45 minutes. So that first 45 minutes was a strong uptake. It took after the first hour. We topped out. See what I'm saying about how significant the first hour is. And then here into the second hour, we'd given up, all of what we'd made in that first 15 minutes on that first opening candle. So then we continued to drift down and move against that opening flurry for the rest of the day. And we went under, and we were biased under the 20. So again, you see here, the flat moving average would have kept you out, because you'd been above it, below it, above it, and then finally below it, and then it continued down. And it was into close. We're talking about the open today, but you can see the size of the closing candle as well, quite significant to the downside. And then after hours, we continued to decline into a key round number, I guess. And I can't see what the time is. So this is the next day. I think we moved higher, and then continued to decline the following day as well into the European Open. So the moment has continued. So open singly with the previous high. So there we are. So it's just a bit more information. So this is the previous day's high. There's the previous day's lows. This is the pre-market action, and we opened here after the first 15 minutes here at the close to the pre-market high. So this is the previous day. We were above most of the previous day's highs, so that's why it was so positive into open, even when we'd sold off pre-market. See, now we've gone down. We're still above yesterday, way above yesterday's low, and just below previous day's highs here in the final hour before the actual cash session opened. That was all. Also, all those sales were blanked out, but equally, it was a false move higher, because it was also sold off after, say, so that's 15 minutes, 30 minutes, 45, first hour, all positive green, and then it gave it all back up within 90 minutes. So within 90 minutes of the open, we were still positive, but it had given up quite a significant part of its upside. Okay, rounding top. So if we cut, so that's the 15-minute candles. So we break this all down. I remember what I did now with this. So we break this down to the shorter time frame. So this is the 5-minute candles. So you can see there's that move down. There's our 5-minute burst. So 1, 2, 3. That's the 15-minute candle, where the number 4 would be where the 15-minute trade had gone long. Whereas the 5-minute candle, you can see the huge volume pickup on open. That was enough to have got you triggered long. Why would we got long? Well, it's the opening flurry has confirmed the volume to the upside, and we're just riding it up. You could have got out there initially on the first. So just again, another strategy could be just a change of the color of the candle after we've had 3 big-bodied positive ones. Then we get a very small-bodied a doji candle with big wick to the upside, big wick to the downside. Not sure what's going on. That might not be enough for you to initially bag that first 15-minute profit, but for some it would. If you hung on and see what was happening with doji and decision, and decision, another one higher. You could have entered again there on the conclusion of that. This is the next, is that a 5-minute candle? I think it might be. 5-minute candle. There at the end of, so you could have gone long again there if you hadn't have got out there, because we've gone green again. But then we start to slow down. The body of the candles are small again, and then we get the big down one here, and then the big down one here. So that would have got you out here at 4, and the rounding top at 3. You see the rounding top there at 3 on the 5-minute time frame. So if you'd held that for the peaking out, if you like, from here to 4, you still made profit. If you just got out on the reaction of the move, this 1, 2, 3, 4 consecutive green and big bodied candles, finally giving up when we got to red, you'd have made that sort of profit. If you'd held it, and bought again here on this next big candle here, that would have been a losing position, but you'd have still gained on the first entry as it came back quite aggressively there. And again, you see here at 4, not only have we come down with a big candle, we've closed back under the 21 EMA. So if you're going to use that as a basic entry, a break above it here, and then a close below it here. So again, you've still made profit on that move. And as you can see, what's happening as the market opening flurry goes down, as the session moves on, the volumes die off. So we close down. The volumes reduce quite significantly from the opening flurry. So all the institutions have got rid of or done the trades they wanted to do um, into from the open. Yeah, that's the 6:30. The blue line here is the close here, 9 o'clock London time, 11 o'clock Eastern European time. And so after the opening flurry, this opening hour or so, as we saw in the 15-minute chart, we know we've rippled lower all day and we've closed lower for the day. So that's the close of the day. And this is moving into the following day, Asian session. Then you see the volumes picking up. I can't quite see what that time says. But again, it was long, interesting. This Asian session rally stalled. Well, where did it stall? Well, at a key level from our opening session in the US session, wasn't it? It stalled at the opening salvo high, basically. Didn't get quite to the US opening high, but and then it declined again. So it gave it all back yet again. Again, a lot of this could have been news driven. There could have been some significant news there, but again, just the moving averages kept you to the right side of that move up, and then a big breakdown there at whatever time that was. I think it's a following. I can't see what's followed, but and then it's just declined again to the downside, breaking that low there, the immediate low of this day, and then moved down to new lows back to where number one is down here. So it's all about time frames. It's all about the time frames you're trading. So there we go. I'm obviously doing a different time frame. So this is the 1 minute time frame. So burst, strong previous days high. This is down the 1 minute now. So there's that initial pause and stall after 5 minutes. You can see here. These are the 1 minute chimes now. We've moved. Get out here. If you're trading on 1 minute, the touch of the EMA is enough. The 21 EMA. So we're out. Congestion there for about an hour or so. Another move up. That was the first red candle that's actually a potential close position. We bounced off that for the first break, but we didn't get as high as we had in the move high. So it's suggesting perhaps weakness. And you can see the collapse down this side. So lots of ways of trading this at different time frames using the 5, 15, and even here down at the 1 minute time frame. But as you can see again, there's no volume on this, but this is the minute time frame on the open. So you see the strong move. The trend continued. It followed through. It ran to a level and then congested. There's about after that 40 minutes, and that's why I say the opening moves can be so key. And now burst over. I actually got the volumes on this one, but burst over previous high on strong volumes after 2 minutes. So thank you very much. And we trail it up, take our positions. What's this? The DAX 15-minute with the trend position left on the run until EMA broke. Positive start, up to Friday's high and Friday's close. Gapped on pre-market, held and open, trigger short at first 15 minutes at number 4, and then retrace. So let's have a look at this. This is the DAX on the 15-minute. So there's that gap on open, which is always quite positive. This is pre-market high, the blue line. Rallied. And we touched and got out there at the using that 21 EMA here on the 15-minute chart here on the DAX. Sideways action, weakness. Looked like we're going to another rally, but we didn't get as high as we had on the opening salvos or the opening. In fact, this is 2 o'clock, so this is later in the day. This is the close. But anyway, you'd see talk through. So that's a suggestion that might not happen, and indeed we continue to decline. But we didn't go short because we're still above the 21. Went short there, reverse, but again the high wasn't as high as that negative candle. It certainly wasn't as high as that previous high. It certainly wasn't as high as there. So the highs were getting lower. The lows were also getting lower though, so it was still biased. But then there was the gap below. Then another one. Then another one here. This was getting a bit iffy now. Is this going to hold? No, it didn't. It collapsed. Where did we collapse to? We found support at the gap was finally filled, but it took a while. So the gap's filled. then we've gone sideways, then we've gone sideways, and then what's happened here? This is the European session sideways action, massive gap here on open of the US session. Sorry, I've gone backwards. New high above this previous high and this previous high here. Looked like we were going to go up, didn't happen. Turned down here on open. So that's 2 o'clock. So this is a 50 minutes. So we've gone down. Then we break the 21. It moved lower, but we didn't get to this congestion zone here. We held above it. Moved higher. Couldn't get higher. Couldn't get higher. That was looking okay at this point. Key level here, which we couldn't break. But then there was that big significant candle. Look at the size of this candle. That one didn't play. It had a retest, but we did follow through. That one followed through without a retrace. So follow through, break through this congestion zone here, this key gap that was filled again, and just didn't look back this time because the gap's been filled. Next target would have been number 2 here, this low from this move here, and it just gapped through that. So more weakness, and you can see the moves, the big candles are on the back of high volumes. You can see these spikes here in the volume. That they don't all play out. That one didn't play out there. That one had followed through and kept going lower. That one moved us up. It's a bit odd. There's a bit of volume here on the open. So have an approach. Follow your approach. Stick to your rules. Don't get the stop loss too close, but if you've got a trend going, that's great. If you've got a lot of choppiness, sideways action, you don't want to be, you want to be out of this market. A few losing trades. So, well, we've got no direction. We've tounded this. Looked like we were moving up because we got a lower high. We got higher lows here, but we're not moving. We're not getting higher highs. We got lower highs, if anything. So we got a wedge shape formation until we sort of break out, and that's what's happening. And then all of a sudden, unbeknownst, a massive gap. So if you were trying to think this was going to go back short, you're caught out, and off we went. But eventually we did come back to it, didn't we? The blue light. See the blue light? Eventually we did come back to this, and then we went. So this is a false break, a false move higher on the gap here between 3 and 4. So we've got here. So there we go. Same thing down here on the 1 minute. This is the 15-minute chart on the DAX. This is the 1 minute chart on the DAX. You see there's the gap on, what is that? I can't remember. That's the European Open. Oh, that must be the, I can't read the times. It might be this, when it's from, but you can see here, what I'm trying to say here is it looked really positive. Nice, energy retrace, and then we've got this sort of M shape. We've got this mean reverting strategy, but I say all along we were above the 21 EMA before this big break here, and that is the open, isn't it? And then it's gone short. We've gone below our low. We still haven't got obviously the gap filled, and we've gone side. So it's then very much congestion. Thereafter, sideways action, not a lot of direction, little volume after the opening flurry. So again, another failed move to the upside, somewhat, but we've held the lows. We've held the gap basically, more or less, as that moved on to whatever time it was. It was 1 o'clock in the European day, European morning still. Stocks around again. Individual stocks around earnings, beating or missing. This happens to be same thing. 1 minute chart. Obviously, no action until the news, until the opening bell. Big gap on energy on open and continue to move higher. First phase was a retrace to the second moving average there. So there's the open. Buy there, sell there. Buy again here as we've gone back of the moving averages have gone to new highs, but from this one here. So buy at 5, retrace at 6, buy at 7 on the big candle, back, get out at 8, and actually go short there on those short time frames. So, but still bid overall, isn't it, to the upside? So there's lots of examples of these. Earnings from September, gap on open, volume spike as well. Rallied, and get out when it breaks back under the closes under the mid moving average there, and it actually went under the 20 as well. I looked to go short, didn't happen. And continue to move high, but nice move from open. That was Costco, Carnival, Nike was the other one. Again, similar patterns, following the rules, in and out of trading this crossing moving average strategy. Reverse, this is a gap going the direction, so miss for earnings. Outlook downgraded despite earnings not so, opened big gap down, trended lower, tried to retrace, trended lower, but very small volume, and it's maintained the worry of the opening session, hasn't it? It's given a little bit back, but here it's moved low, and obviously buys remain to the downside for the day. So that's trading the open, guys. So whatever strategy system you have, make sure you prepare. Make sure you know about the news. Make sure you know what normally happens, what's been going on. Have we had a trending day? Have we had a mean reverting day before that? And let's see. So let me just see if I can get the live session up again. I think it is back. They've told me it's back. Any questions? Anybody, please let me know. So this is what we looked at today. Why the open so important. Key times. It's important to the Forex market as well, these opening sessions, and to have some approaches to trading. 3 books I still recommend, and I've been doing for years and years and years. New Market Wizards, or Market Wizards, Trading in the Zone, and The Resilience of Stock Market. 2 new books in the last couple of years I've really, really enjoyed. Tom Hougaard's Best Loser Wins. And also last year, Steve Goldstein finally put his book together, Mastering the Mental Game of Trading. Really nice update for 2024. Really a lot of the stuff that's in Trading in the Zone as well from Mark Douglas wrote 20 odd years ago, but Steve took a different, I was taking it to a new level as well. And I understand he's rehashing it as well. So good luck to him. 2 other books. This is all about. This is this one here. Ryan Jones's. This is all about money management, the maths of making money. A very astute book as well. Playing by the numbers. And this is a new book by a former, one of the best traders in the Citibank desk of the 2010s, a guy called Gary Stevenson, a local guy from the East End of London, who was good at maths, got a very good economics degree at the LSE, and won the trading game, which is a way that the Citibank recruited raw graduates. And he did very, very well, and then walked away from it all, which is very, very unusual. And he's got some very strong opinions on the top 1% and how the tax system should be changed in the UK. But anyway, fascinating book, great read, and he has a very, very strong ethic, a very, very strong way of expressing himself, and one to watch for the future. Certainly, Gary Stevenson, the best of luck to you, sir. So that's us. We are theproptrade.com. Let's have a look if the trade locker is back. I was told it was. It suggested it was. Let's have a look at the platforms. Just my demo account. Let's have a little look together. So we see. There we are. We are indeed back. So I was playing with this earlier before it went down, and I can't remember where. Yes, lost all my lines. Been taken out. But again, so let's just obviously this is in hindsight now, but let's have a look at the opening trades. Wasn't that active, was it? So what we were doing. So if we were trading the DAX here, for instance, into the US Open, which is what we were going to do today. What you do, this is what I do. I'm saying it's the best thing to do. This is what I do. This is what works. So there's the pre-market. Oh, there we are. Unable to store data. Never mind. That's obviously what's happened. So this was the pre-market high. Sorry, we'll come up to. I don't want that. So this is the pre-market high this morning, 8:30 after the markets open. These were some opening trades. There's the opening. Let me just mark that one as well. The actual cash open for Europe. There's the USD 8 o'clock. That green line. I think green line is the European Open, or the cash open of Frankfurt. That first 5 minutes. So as you can see here, it was positive. It had been above its 20. The red line here is the 21 exponential moving average. So it was positive. The immediate 5-minute candle was down, but it was positive because the pre-market. If we go back to the beginning of the day, say that. So that's that. Make that. Oh no, make that orange. So the orange line is the beginning of the Asian session. So the pre-market high for the Asian session was there, and you see what's happened here right at open. We've gone into the high of the pre-market, so that would be significant. So that was suggesting. Oh, I don't want a vertical one. I want a horizontal one. There we are. Just get rid of that. I've got too many lines at the moment. It doesn't like it. So that blue line there, we would have put on as we'd opened. If I'd woken up earlier in the morning, and the pre-session low here at 6:30 my time. Here. Oh, come on! Sorry, I've been studying too long. So the pre-market low was there. So that was the high. That was the pre-market high, 23,800. That was the pre-market low, 23,700. So sorry, 110 point gain, and that was the low. So from the low at 6:30 London time, 7:30 Frankfurt time. So the main German traders are very much at their desk by then. Was the low, and it's rallied. So on this strategy, having been short here, it turned around. It closed your short out. It's green line, isn't it, on this one? So green line would have closed out there, and then here. At 7 o'clock, right on 7 o'clock, it triggers long. It actually breaks the 21 EMA. So we're long from 7 o'clock. It then breaks sort of here at 7:30. It then breaks the 50 period. That's enough to add to your position, and that's looking quite good for the This is half an hour before the cash market opens. Then there's another mighty candle here at 7:50. So that's enough to. Again, I'm saying this is if you're scaling out different approaches, but 3 potential opportunities to go long here. One from back here at whatever that was, 23,750. Then it were in 23,769, and then 23,800 here. So there we go. So long. Initial opening candle there, 8 o'clock, is a down candle. But interestingly, look at what it did. It didn't close below our 20-day moving average. It didn't break the 9-period moving average. It did there on there. So strictly, these longs would have closed out there. So that would have been a losing one. But you would have made profit from those first two if you'd done that, if you'd used the close out on a 9 period. Obviously, you'd open this just 10 minutes before the session, so you were expecting a bit more movement potentially. But so here, after 10 minutes, we'd moved higher again. We're back to where we got in here at 7:50. Then was a doji, not sure what was going on, and then it looked like here by 8:20 here we don't know this. We didn't know this at the time, obviously. But we rallied to 23,862, and this was looking at this particular point there. That was looking pretty good. But what this is telling me is that the players, the market makers, the big institutions were just letting this rally, this pre-market rally, follow through, and then suddenly had sale orders at 23,650 or 23,860, 23,850. And so this long, if you'd added again on this candle, was very much a losing trade. But then it went short here. So these longs were closed out as the stop loss would have been taken out. Then it would have gone short here, and this has all happened within the hour of the open. So here at 8:50, a whole 50 an hour ahead of the break there of the that we got at 7:50. Sorry, no, it was that one, wasn't it? At 7:30 above the 50 period. It was back under the 21, and and we were very much short from 8:50, and then it moved down and down, and then sorry, the 20, and then we would have added here again on the reverse. So here by 9:05, you're still trading this. Obviously, if you'd been just trading the open, you'd been and gone, or you'd follow it through. That would have been another follow through there, another short position on the side, based on the size of the candle. Your stop loss is up here, trailing your stop loss down, 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 and then probably this candle here by 10 past 10 would have reversed enough. Certainly, I would have had my stop loss there. Then would have taken out that short. So those shorts from here and here would have been taken out on the reverse there at 23.67, and I certainly would have walked away. But again, at this point, you see the bias is to the downside because we're very much below the pre-market low. The pre-market high we've been above, but we were only above it for 5, 10, 15, 20 minutes, weren't we? That's the pre-market high, remember? Only 20 minutes, and then it sold off. And so we were biased now to the low side. That was the pre-market. Obviously, the day before, if we just go back to the daily time frame, the day range would have also been marked. So the previous high and low of yesterday. So previous low of yesterday is down here at 23,616. And the previous high of yesterday was also our round about our pre-market high, wasn't it? There, that 23,821 area. So we were biased to the upside initially, and then we turned around. So it's a down day at the moment there on the daily time frame. But you see in the higher time frame, it's sideways for like about a week or so now, or 1, 2, 3, 4, 5 sessions on the DAX on the daily session. So we're really sort of channel bound, aren't we? So again, there's those daily resistances. The intraday highs today was above that, but that becomes a key area. But we've got all this data, all this data, because the daily chart itself is short. So again, if you're trading above the 5 or the 2 minute time frames around the open, your bias is to the downside, not taking long positions. So, but coming back to our 5 minute time frames and trading the opens we were just talking about. So that's all over there by sort of 9 o'clock in no-go line. And you can see what's happened since. So since for the rest of the day, come back and look at it at lunchtime. We've bounced but to the 50, retraced, bounced over, couldn't hold it, lower. So the low here is low. And then what happens? Right, so here we're now 2 o'clock. So this is the US Open. And the US Open opens here. You see very little influence. It's a quiet day, very little influence as far as the DAX is concerned. Okay. And that's, just sideways action now, but biased to the downside on this intraday because we're down. So the 5 minute is still down. And you can see the higher time frames would still remain short. And there you go, that 15 minutes. So down, retrace, down, retrace, down, retrace, but we're biased to the downside because we can't break and hold the 20 period moving average, let alone a 50 period moving average following the opening flurry this morning. So again, what's that telling us? Well, there we got a pivot point, a pivot turn. Here we've got a potential, it's not quite a tweeted top, but we've had a strong run from 6:30 through to our 8:15 candle positive, but that was all given up. And see how much more quickly we gave it up than we actually rallied up there on that. What's the 15-minute time frame showing us? And if we go up to the hourly chart, you can see it's just chopping sideways. So there's our 7 o'clock to 8 o'clock candle. And that indeed, as we said, was the high of the day, and short from there, and then a huge down candle from 9 till 10. But we don't want to break the low that we presented at 10 o'clock. There you can see we've bounced off that for the rest of the day on the down. But on an hourly basis, we were under the 20, and we've been under the 20 since 9 o'clock this morning. So again, it's all about time frames. You're trading it. and we saw the daily, and then finally the 4-hour trader. Not a lot going on there. There's a trend following 4-hour trader is up a bit there. That looked quite positive, and then it's just petered out really. No body candles to get excited about on the 4-hour time frame. Okay, oh, that made sense. Let's just use the DAX also as not DAX, the Dow. But anyway, demonstrating my point. Let's just use the let's use the Dow. Not that. Don't want that. I want that. I want to use the Dow as an example because it's obviously we go down to the 5-minute. You can see the impact of a quiet day even at open. So the cash market opened 2:30 here. You can see it's very, it's not, it's quite a volatile day. But that is the 2:30 cash open isn't anything to get excited about. But again, bias remains to the downside, doesn't it? So that's the start of today. So do the same thing. That would have been our pre-market high. It's 45,617. Let's put that in. I did all this on the other charts before the system crashed. It was all presented. We were going to trade line. So that was our pre-market high. This is our pre-market low. It's here. Done the same sort of thing, haven't we? So there's our pre-market low. It's quite a big area, isn't it? It's quite significant. The fact we bounced into it 3 or 4 times during the day. So that's our pre-market high. That's our pre-market low. Let's put in the 2:30 open. There's 2:30. We were already biased low. The moving average, the 50, it was particularly flat. You can see there's not a lot going on there, but we had that big down candle there at 2 o'clock, so half an hour before. And so we were, although it closed up the first 5 minutes, we if you're trading following the strategy, you'd have already been short here from 2 o'clock. The opening 5-10 minutes didn't really make any difference. We actually went shorter. We did retrace, but as you can see, the high here after 40 minutes of the open, so the 40 minutes in, it was up, but it wasn't as high as it had been earlier in the day, and certainly the Asian session high was nowhere near to be tested. And we've moved actually to below pre-market lows. I don't know, that's there, isn't it? Pre-market low, it's that one. So we were at it on open. So that was, we were biased to the downside anyway. So we bounced off it a wee bit, but now we've broken it and we're back around it. So this level we'd identified earlier in the day through here, this sort of zone. It doesn't have to be the actual line itself. You can put a zone on this zone here, even in the 5-minute trade, is where we're back into at the moment. So we need to clearly break away from it to one direction. It looks like we're still biased to the downside, but we, look there like we didn't want to go any lower. We went up. Next 15-20 minutes will be key. And obviously now what's coming round is the 4 o'clock is the fixed time in London, and see if the US stock market. So to take this up, I'd like to see a significant break of this 50 period there at 45,545, like we had here, but then it was sold off. So are we going to go higher? At the moment, we're still biased to the downside, down on this 5-minute time frame, but we're well beyond the hour's opening bell session, so things are calmed down. I'm waiting for some data. There was some key data today. It was the payrolls review. What that looked like, actually. At 2 o'clock, 9. So it's worse than expected, 900,000. But this is just giving more more of a stick to beat the Fed with, or to beat the Bureau of Labor Statistics. But this, it's a non-seasonally adjusted. It's the first preliminary reading. Last time it comes out twice a year. If I can just look at the history of it there, guys, you can see it comes out twice a year. and it was big revisions on it anyway. 818,000 from August. It was reviewed in February at 600,000, and it's actually come out at 900,000. So that's again, that's suggesting that the payrolls have been overestimating jobs growth for quite a long time. And again, it's another big sticker for the Fed to perhaps be cutting rates, and certainly looks like next Wednesday. I mean, it's nailed on for next Wednesday now, as market as much as anything is. But it's massive pressure. They're going to use this certainly politically, but this is again, this, as I say, this gets revised quite significantly, and the Bureau of Labour, as with most government organisations around the world, they're they're overworked, they're understaffed, funding's being cut, and again, obviously Trump cut a lot of staff, and then there's a hiring freeze as well. So head of the BLS went. New temporary person's in charge. The permanent person hasn't actually been identified yet, I don't think. But so yeah, you can't have it both ways. But there we go. That's not politically. That's a big stick for Mr. President Trump and the administration to use against the Fed yet again. But anyway, there we go. Trading the open. Have a strategy, have a plan. There we go. We're turning around. There we go. That's exactly what I was saying. A break. Let's see where this one. Looking to buy that now potentially, as the buys may have turned off. But that's our current market low. But we'll see where we go from here. So take care, everyone. I'll be with you tomorrow. Wednesday is PPI day, and we got the European Central Bank. No rate cut expected from them on Thursday, and then the key CPI data on Thursday. So I'll be live with you for that as well. So take care, be good, and let's hope TradeLocker Kate stays with us for a little while. Okay, all the best, everyone. Bye bye. Thanks, Jatin. Take care, my friend.